Well, I think the outlook is mixed, but mostly bullish for reasons that we'll discuss later. I think it's likely that we continue to experience supply shortages in commodity, not as much demand based as in fact a response to declining sustaining capital investment. But as you also point out, there are many more geopolitical concerns, some of which have been expressed in the market so far, and some of which will be expressed in the markets to come. I note too that the awareness that the policy community has and the awareness that government has around these supply shortages are starting to increase investor interest, both official sector and private sector interest, something that we haven't seen for 10 years.
In this insightful interview, renowned investor Rick Rule shares his perspective on the current state of the market. He highlights mixed but predominantly bullish outlook, citing supply shortages in commodities as a response to declining sustaining capital investment. Geopolitical concerns are also influencing the market. The awareness of these supply shortages is increasing investor interest, which hasn't been seen for a decade. Rick emphasizes the underinvestment in sustaining capital in industries like oil and gas, which can impair their ability to produce. He emphasizes the need for investment in natural resources and energy, considering the growing global demand. Stay tuned to discover why Rick believes the world needs more forms of energy, despite the push for alternatives. This interview provides valuable insights for both short-term speculators and long-term investors in the resource sector. Don't miss the ending where Rick shares his crucial advice for successful investing. Let's dive into the rest of the video.
Almost the entire supply side, as an example, in the biggest of all extractive industries, oil and gas, it is estimated that the oil and gas industry as a whole is underinvesting in sustaining capital to the extent of about $1 billion a day, $365 billion a year. The industry can continue to do that for a little while, but over 2 or 3 years, deferred sustaining capital investments like that impair the industry's ability to produce oil. It isn't that we haven't discovered the oil. It isn't that we don't know where it is. It's that we are under-investing in, as an example, development, drilling, and infrastructure construction. The consequences of that can be seen historically in places like Mexico and Venezuela, potentially very large oil producers, countries, that have underinvested in sustaining capital and have temporarily or perhaps even permanently impaired their ability to produce. I'm talking about this from an illustrative sense of point of view. But we've also seen historical underinvestment really across the spectrum in most commodities. We're starting to see that addressed in some of what are now called the battery or the electric metals. As an example, there's been a real surge in exploration for lithium. But the surge that we've seen in lithium exploration has not been repeated in other critical metals, things like zinc, things like tin, things like even copper and cobalt. We have had systemic underinvestment in the means of production around natural resources for a very long time, and the chickens are coming home to roost there. The ESG side, the industry, the private industry is exhibiting record high cash flows. There's money there to invest, but the policymakers are schizophrenic. On the one side, our president has told the domestic oil industry to increase production so he can bring down politically sensitive gasoline prices, while at the same time he says he's going to put them out of business in 2030. The idea that he's going to put the oil industry out of business in 6 years is not a wonderful way to get them to invest tens of billions of dollars today. And this isn't a criticism that's leveled solely at Biden. The same has been true for Trudeau. Canada does one thing really well, produces oil and gas. It's what the country runs on, yet they discourage it. We've seen this official sector schizophrenia for a very long time, and they being the political classes, I think that have done their best to not only discourage by job-owning investment in oil and gas and natural resources, but also actively try to lobby institutional investors and banks against natural resource investment, particularly natural resource investment that is carbon generative. I think Russia and the invasion of the Ukraine was the catalyst, but I think that the seeds were sown for that well before the Russian investment in the Ukraine, Russian invasion of the Ukraine, pardon me. I think what you're seeing is a reaction to the fact that the world's supply chains with regards to natural resources and energy in particular were compromised, that we had a long time underinvestment, and also that investment in hydrocarbons was regarded as politically correct. The big thinkers in the world talk about a transition away from oil and gas, and they talk about peak oil demand occurring in 2030. Let me leave your audience with one statistic about that. We have now invested over 40 years almost $5 trillion in alternative energies. And I'm not a critic of alternative energies, but we've invested $5 trillion in them. And we have reduced the market share of fossil fuels from 82% all the way down to 81% for a $5 trillion investment. What would it take to get the market share of fossil fuels down to 70% in a market where demands for all forms of energy are increasing? The policymakers need to understand that peak oil demand, just as an example, will probably occur in 2060. There's nothing nuanced about this. There's nothing narrative about this. This is pure arithmetic. The big thinkers in the world don't seem to want to understand that 1 billion people on Earth have no access to primary electricity, and 2 billion people on Earth have access to intermittent or unaffordable electricity. What that means is that the world is going to need more of all forms of electricity, more of all forms of energy going forward, and that's going to require, whether the big thinkers like it or not, both oil and gas and coal. I've been impressed on the demand side. I would have expected demand growth around the world to be slower. And I don't think that the strong interest that you've had in commodities is just around geopolitical issues, but rather the fact that we need to continue to accommodate more and more people on Earth that have more and more material needs. I think your comment with regards to volatility is right on. You have these long-term macro trends, and you have these nearer-term geopolitical, interest rate, and economic trends. And I think the hallmark in the near term is going to be volatility. I think the hallmark in the long term is going to be supply shortages. I think somebody needs to identify what kind of investor they are. If they're a short-term speculator or a trader, you trade volatility as opposed to longer-term reality. My experience in the resource business is that you either have to be a contrarian or you're going to be a victim. When you come to realize that markets work, you understand that if the oil market goes up to 150, it becomes unsustainably high because the high prices encourage conservation and they encourage production simultaneously. More production, less consumption means lower prices. So perversely, you become more bullish when prices are weak and less bullish, when prices are strong. It's difficult for people to do. What I ask people to do is look for circumstances that appear statistically inevitable and worry a little less about time. Accommodate themselves to being willing to wait a little bit for what is inevitable, understanding that it may or may not be imminent. When we talk about developing shortages over 5 years, as an example, as a consequence of demand growth, supply shrinkage, what we don't take into account, as an example, is the possibility of a recession. In a recession, you could have some supply shortfalls and destroy some demand, and the prices don't need to move. So investors need to take all of that into consideration, and successful investors in natural resources, need to take a fairly long time frame.
As we reach the end of this captivating exploration into current economic events, I hope you've gained valuable insights into the ever-evolving financial landscape. Remember, staying informed about the latest economic developments is crucial in today's interconnected world. By understanding the forces shaping our economy, you can navigate the uncertainties and seize opportunities that arise. Whether it's market fluctuations, policy changes, or global trends, staying engaged with economic news allows you to make informed decisions that impact your financial well-being. Stay curious, stay informed, and don't forget to like, comment, and share this video.